I would now like to introduce today's presenters. Ashish Sayadev is a vice president, is responsible for accelerating Everest Group's research and advisory in the Asia-Pacific region. He also leads and builds outstanding teams that deliver profitable revenue growth in professional services, technology products, and service industries. Banushi Malhotra is a practice director in Everest Group sourcing and vendor management practice. In this role, she advises clients on maximizing value through their supply-based engagements to obtain cost, business, and operational benefits. Ashutosh Dut is a practice director and a member of the pricing assurance team at Everest Group. He manages the price and solution benchmarking offerings within the cloud, infrastructure, and security CIS services vertical. Mihir Sinha is a practice director on the global sourcing team where he manages the firm's workforce and locations advisory and research practice. And with that, I would like to turn things over to Ashish.
Thanks, Annabeth. Good morning, everyone. Today we have a very exciting and packed agenda for all of you. We will start with just talking about some of the key focus areas for APAC sourcing leaders, with some context setting around the macros, and then diving deep into what we're expecting from the enterprises. We'll also talk about some of the game changers in outsourcing services. We talk about pricing, cloud, locations and talent, and a lot of interesting points that we see we would love to share. And also we would then summarize overall our outlook for the year 2024. And then we'll leave some time for Q&A towards the end. With that, I'll just dive into some of the macros. Okay, so the global forecast, the global growth is forecasted to be slow from 3.5% in 2022 to about 3% in 2023 and 2.9% in 2024. The global outlook is supported by continued consumption dynamism in the US, but faces pressures from China's worsening property crisis, tight policy stances around the world, and the consequence of Russia's war in Ukraine and the growing geo-economic fragmentation. Despite the challenging global environment, the Asia-Pacific region remains relatively a bright spot. It is expected to grow by 4.6% in 2023 and 4.2% in 2024, which puts it on the track to contribute to about 2/3 of the global growth this year. Next slide, please. Now, let me talk briefly about the major economies in the region. Next slide, Annabeth. Yeah. So if you look at Japan, Japan is navigating the impact of macro headwinds. We are seeing some slowdown in growth, wages, capital expenditure, as well as high inflation rates, which impact the propensity to spend on discretionary tech projects. There are long-term policy defining mega tech investments by the Japanese government, which is actually a great opportunity for the service providers. And we're already seeing some very large integrated IT BPO deals in Japan. We're expecting more to come in 2024. If you look at China, which is one of the largest economies globally, is still battling with economic weakness amid regulatory pressures. We see a downward revision in China's growth forecast from 5% in 2023 to about 4.2% in 2024. The IT BPS spending in China is likely to be impacted by new curbs on AI chip exports. If you look at the data privacy regulations, they're making the compliance onerous and hindering business operations. We also see some difficulty in complying with the new regulations, which is a key impediment in cloud adoption in the public sector. If you look at India, which is, again, the third largest economy, or about to be third largest economy globally, the economic growth remains fairly robust. And that's driven by the large public expenditure push, as well as resilient domestic demand. And India is doubling down on technological initiatives. So if you look at increased investments in AI, advanced wireless, government funding in quantum technologies, as well as R&D around 5G and 6G. There are a lot of investments around biotech, also manufacturing, high tech, semiconductor, and so on and so forth. So pretty much a bright spot. A lot of growth expected in the India market. Australia is also pushing down on its digital agenda. We're seeing large public investments, robust demand is expected, although the domestic demand is weakening with rising mortgage payments and lower real disposable incomes. However, there is a 3.5 billion US dollar scheme to aid industry greening, and that energy transition is a big investment being made in Australia, which will throw up a lot of opportunities within the country. Also, smart manufacturing is another area of big investment. If we go beyond these four large economies, we do see continued resilience and strength in the activity in the services sector in Asia, which is evidenced from the PMIs. So overall, we are bullish on APAC. There is growth expected, although a bit of slowdown from the previous year. But excited about the contribution of this region in the global growth. With that, as we think about the service, with that, we'll also talk about some of the supply side trends. We just talked about some of the macros, but let me invite Mihir to share some perspectives around the supply side and what's going on there. Mihir, over to you.
Great. Thanks so much, Ashish. When you're looking at the supply side, India and Philippines dominate the service provider market in terms of FTEs. Almost 90% of FTEs in the APAC region are in these two countries. And India is almost 2/3, 62%. That's a massive market right there. In terms of growth, it's broadly, we're seeing it aligned very closely to what you're seeing in the GDP growth rate. So in 2022 as a whole year, 4 to 6% growth was what we saw in the APAC market. Moving on to the next slide. When we look at it from a center setup perspective, again, you're seeing India and Philippines continue to remain a country of choice for new center setups. In fact, over the last 3.5 years, 4 years, India has accounted for about 60 to 70% of all new delivery centers that have been set up in the APAC region. And China and the Philippines closely follow with about 25 to 30%. So you're talking about 95% of the market just within these three countries. The Philippines, in fact, has overtaken China over the last couple of years. So if you just look at India and the Philippines, again, over here, about 80-85% of the market in terms of new center setups is coming from these two countries. What's interesting to note is the emergence of regions such as Malaysia and Vietnam since 2021 in particular. In fact, Malaysia right now is at a very similar junction to where the Philippines was 4 or 5 years back. So it'll be a location to really keep an eye out for going forward. I would like to add that the insights that you see over here are driven by Talent Genius. It's our new interactive AI-powered on-demand platform, which has been specifically designed to guide IT and BPS location and workforce decisions with the most comprehensive, reliable, and current location and talent data. I'd like to now invite my colleague Bhanushi to share some perspectives on buyer projections and expectations for the coming year.
Yeah, thanks, Mihir, and great insights on this, right? I mean, India and Philippines have always been leading our service delivery sector. But in fact, I've also been talking to a lot of enterprises who are based in APAC recently, and they said, hey, our delivery centers are shifting from India to Malaysia. And I was like, okay, that is an interesting story that we're hearing. So we do want to now just, jump into the audience perspective. We want to open a question for the audience over here. And we want to understand what the top business challenges your companies are facing in 2024, right? Or likely to face in 2024. So we have a lot of options over here, but this is a multiple choice. So do feel free to select as many as you feel are highly relevant for your company. We'll give it probably a minute or two to open this poll, and we would love to see what you all have as perspectives within this space. So we have a range of factors over here, from cost pressures to talent, to increased macro geopolitical risks, regulations, and so on and so forth. Let's see which one actually gains maximum traction. Okay, we have the results now. So I see that cost and margin pressures is very, very popular. We have 74% of you that have picked that one, followed by, what is it? Slowdown in demand at 57% respondents. Interesting. Okay. And let's just scroll down a little bit to see talent. Okay. Talent is still a key priority, I would say. Half of you have picked talent as a top business challenge that you expect in 2024, which is very interesting to see, because in 2022, when we were talking about talent a lot, the whole talent attraction and retention story was becoming very strong. People were struggling with it. So it's interesting to see that, it's still a key business challenge that you predict going forward. And if we jump to the next slide, we'll actually be able to see what we have been, getting from the market. So what we can now do is compare the results that we've gotten from this to this, right? So cost and margin pressures, always the top one. And it's also the top one based on the studies that we have done across a lot of enterprises and sourcing leaders across the industry. And it's good to see that the results are tallying in that case. The second one that we've seen over here is adapting to evolving customer needs, right? So the evolving market needs and the business need to actually adapt to that is becoming increasingly important. Whereas talent, if you look at the entire, top 5 of 2024 ranking, we did not see it in this particular rank, right? In fact, I think talent had moved down to the 9th or 10th rank. It wasn't in the top 5 anymore, which is quite contrary to what we've been seeing in the past 2 or 3 years, right? So just to, bring that to notice, I think cost and margin pressures with muted growth in 2023, though APAC is slated for strong growth, globally growth has been sort of muted, and APAC sourcing leaders were at least sort of, echoing the same sentiment that cost and margin pressures is still going to be our key priority. However, it is not that they're not planning to, sort of still think about adaptation to customer needs and, adapting to new business models, which you can see as the fourth one over here, right? So what we're actually seeing as a major sentiment is that enterprises, sourcing leaders, they're still planning to do a lot, right? They want to do, adapt to the changing demand, adapt to new business models, but then they want to do it with lesser costs, right? So you want to do a lot, but with lesser. That's the story that we are seeing. And that's the story I think that procurement is also echoing, which you will, if we move to the next slide, this is a study again that we've done with a lot of sourcing leaders. And they have also been echoing the same sentiment that we've been seeing across enterprises, right? So cost optimization is their key priority as well. And if you look at some of these, focus areas for procurement, we've been, chatting a lot with Singapore-based enterprise leaders lately. It's been coming up a lot within that space, at least, that there has been a lot of focus on process optimization to also manage costs, right? So P&L savings, cost reduction, cost avoidance, that's always been a part of procurement scorecards. But when you look at things such as process efficiency to drive cost reductions, that is a whole different story, right? And the reason that is happening is also because of technology. I would say that with the whole technology modernization game that is playing out, process optimization for cost reduction is gaining a lot of prominence within the APAC market, right? So we'll get into technology in a little bit. We have a little bit to share on that front as well, what we've been hearing from leaders all across the board. But if you look at other priorities of sourcing on this slide, there is a increased focus on supplier relationships, right? So recently I was speaking to a very large, what do you call those, real estate development companies. And the sourcing leader over there, she said that she has been using an innovation hub to actually be able to manage and track ideation and governance ideas from her suppliers, right? So think about how technology has come into this picture of supplier relationship management, and even to such a mature capability such as innovation or risk management. People are using technologies and tools which are specialized in this space, and they're actually able to leverage a lot from their supplier relationships because of this reason. So that is the sort of transformation that we are seeing in the market going forward. And of course, gaining competitive advantage. So talking about ESG, talking about procurement agility, all of these factors are, of course, increasingly important. All right. So with that, let's move to the next slide. And over here, what we want to talk about it is a little bit around, what has been happening in the past 7 months. Like, what is the sentiment that APAC buyers are actually adopting with their suppliers, right? So we have been talking about costs all the time. But what are these procurement leaders doing with their suppliers to be able to optimize these costs? So yes, there have been a lot of hard negotiations with suppliers, especially on input-based pricing, and that has led to very muted increases. And if you link back to a couple of slides back, that matches back to my whole muted growth story of 2023, right? So what is happening over here is that if you see on the left side, you would see that the traditional skills such as applications, infrastructures, there's barely any increase that has happened with suppliers in pricing, right? And if you see on the right side, there's a little more increase, I would say, on the specialized skill set side, which is as expected, right? Of course, your next generation technology skill sets do have the capability to demand more premium in that case. So these are just, some high level insights that we wanted to share with you. Ashutosh, do you want to add any color on this? I know that you specialize in pricing, so you can probably, give us more view on this.
Sure, Bhanushi. Looking back at 2022 and contrasting the price increase this year, right? So 2022 was an exceptional year with respect to the macroeconomic situation, with respect to the overall demand, with respect to exceptional talent shortage as well, which had led to unprecedented price increase. And we had seen price increases as high as 6 to 10% within 2022. But come 2023, and with the growing uncertainty within the market, we're seeing enterprise customers negotiate very hard. And as Bhanushi said, that's led to a muted price increase across the variety of skills, be application services, be infrastructure services, or be BPO skills. There are few pockets wherein we've seen this price increase to be to the tune of 2 to 3%, and these are largely around cloud and cybersecurity, which have been more of the in demand and hot skills, and continue to lead the chart with respect to price increases.
Yeah, exactly. So basically, the overall sentiment is that there is either a flat rate or there is a very slight increase across areas, right? Depending on the skill set we're sourcing. Okay, great. So with that, what we want to now again link to is what are your expectations, or what are buyer expectations from their suppliers going forward, right? So if we move to the next slide, what you see now, this is a sort of rating scale that we've given of, what are the factors that are driving buyer satisfaction levels, especially when it comes to service delivery related aspects. So if you see over here, you would see that innovation has a very high rating, proactiveness has a very high rating, and so does technology, right? So basically, again, going back to the 2022 story, when buyers were just happy with, the fact that service delivery is not being disrupted, our suppliers are helping us in the time of crisis. Now there is a lot of expectation of innovation, right? Why aren't suppliers doing more, delivering more services to us, giving more ideas, giving more innovation to our service delivery offering? Why aren't they being more proactive? And linked to that, why aren't they doing it with the help of digital tools and technologies that are out there in the market? Why aren't they integrating those things more into their service offerings and sort of making this whole holistic, innovative construct for us, right? And buyers are very happy to link that to into their commercial engagements as well. I know that Ashutosh has a lot to say on the commercial engagement, so I won't steal his thunder. But that's how we're actually seeing the market move, right? That innovation linked to your contracts and linked to your technologies that you're integrating into the service delivery offering. And just moving forward to the most popular technology that's out there, no guesses for that, but GenAI, right? So many enterprises across APAC are expected to delve into GenAI exploration in 2024. It's already started to a large extent, right? So if you look at this, the left side of this page, you would see that around 30% are already conducting pilot projects. They're already exploring a lot of use cases for GenAI to test it out, right? I can't tell you the number of enterprises we have been talking to in the past couple of months on GenAI. Every procurement leader has asked us. We've done, briefings with 90% of our actual enterprise clients just on GenAI, not even on any other topic, right? So this is actually becoming not just the buzzword, but people are looking into it, doing pilots, doing use cases. Now, what does this mean for sourcing? Number one, you have to help your business in adopting GenAI across the categories that they're sourcing, right? So the most popular categories, as anyone can think about, is the ones that are more, I would say, sort of user-centric, right? So marketing, HR, customer experience, these are the most popular business categories that sourcing is helping to source in terms of GenAI. And on the other side, sourcing also needs to think about how they can get GenAI into their own value chain, right? So think about easier use cases that you can integrate and do pilots in, synthetic data generation. If I link that to procurement now, your negotiation is a popular one you can think about, your spend data analysis, your RFP shortlisting, all of those things. But remember that GenAI is always about what you put into the model, right? So if you're partnering with a provider or you're working with external tech providers, it's always the data that feeds into it will actually lead the right results. You don't want to ultimately be stuck with hallucinations or some sort of false analysis that you're getting out of it. All right, so I think I will stop my monologue now, but Ashish, what do you want to speak about next?
Yeah, thanks, Banushree. So as enterprises are thinking about sourcing of IT, business process or engineering services, we wanted to capture some trends and strategies that we are seeing that you may want to think about as you engage with vendors or set up your own shared service centers. I'd like to invite Ashutosh, my colleague, to just talk about some of these trends and strategies. Ashutosh, over to you.
Thanks, Ashish. Annabeth, next slide, please. As the APAC outsourcing market continues to mature, right, we're witnessing more and more enterprise customers expecting providers to be more flexible and innovative in their overall commercial arrangements, right? They want those arrangements to align with their business objectives and priorities. Now, this has led to many more next-gen commercial constructs like outcome-based proposals within the market. However, the question that we often get asked by our clients is that have most of these translated to outcome-based contracts or not? And the answer to that is well, not really. And the reason for that is twofold, right? Service providers are facing challenges in taking these outcome-based constructs to clients due to limited data availability, handling enterprise stakeholders with varying maturity levels, and also certain contracting related challenges. On the other hand, on the enterprise side, they are also facing challenges in establishing clear baseline matrix, coping up with budget uncertainties, and also building an effective mechanism to track and measure outcomes on a frequent basis. As a result, we see the prevalence of models like fixed fee and T&M still to be quite high. Additionally, I'd like to highlight that wherever we see outcome-based models, they're not pure play. They're typically bundled with traditional models like fixed fee and T&M, and the fee is typically around 25%, which is linked to the end outcomes. Let's delve deeper into the infrastructure services market to understand the trends around adoption of some of these next-gen commercial models. Ahmed, if you can please stay on the previous slide only. Yeah, thank you. Similar to the aggregated view we just discussed, right? Within infrastructure services as well, traditional models like fixed fee and RU based occupy majority of the share. However, if you compare the data between 2019 and 2023, which is on the chart on the right hand side on the slide, there is an increasing trend in adoption of these next gen models, especially within the APAC market. Now, one of the foremost reasons for this trend is the dynamic nature of services, especially in the cloud space. Now, with more and more scalability, ease of provisioning and deprovisioning the infrastructure, sometimes it's becoming challenging to implement those traditional commercial models. And providers have started to come up with innovative models like percentage of cloud spend managed, which helps them accommodate the frequent variability in the overall volumes. Another reason for the increased adoption of the next gen models is especially the outcome based models is that enterprise customers expect the providers to put more skin in the game, become their strategic partners, and hence align the overall fee to their business objectives and priorities. So that's another reason. Next slide, please. Let us now explore some of the common variants of the outcome-based model that I was just talking about, right? So within this model, we've observed that the provider fee is either linked to some of the critical KPIs, SLAs, metrics, or alternatively, it is dependent on the overall financial impact that the provider has created. Now, the incentive mechanism and linkages also vary with respect to both the variants. As part of the operational based metrics, the provider fee or bonus is typically realized depending on the success or failure to meet the defined outcome by the provider. On the other hand, the bonus and penalty clause could be either fixed or incremental depending on the impact created. Now, when we talk about the financial impact model, right? Here, the provider fee is typically linked as a percentage of the overall impact that they have created. Now, it could be with respect to increased savings that they have been able to bring, or even incremental revenue that they've been able to gain. One quick example that I've been seeing, especially within the cloud space, wherein such models are applicable, is FinOps, wherein the overall savings that the provider is able to make within the cloud market, they charge their fee in line as a percentage of the overall reduction in the cloud spend. When the contracting is done, the overall bonus or penalties which are associated to the SLAs and KPIs, they could be either in a fixed format, wherein if they achieve, that's a fixed amount. If they don't achieve, there's a penalty. Or it could also be in an incremental manner, wherein per each objective or defined outcome that they've been able to produce, the bonus or the penalty increases. Usually what we have seen is there's a ceiling amount on the percentage of the financial impact model on the outcome based construct. It starts with certain percentage and then capped with a ceiling amount. So those are some of the common contracting mechanisms and linkage variants that we've been seeing. Annabeth, next slide, please. All right, let us understand the implementation of this outcome-based model in detail with the help of a short case example, right? The enterprise in this case was a APAC-based technology and high-tech company whose application and infrastructure estate was being managed by a tier one Indian service provider. Now, due to high inflation and uncertain macroeconomic situations, there was a mandate from the top management of the enterprise to bring the overall IT spend down by 30%. Hence, at the time of renewal, the enterprise took the RFP route to explore what are the best deals which are available within the market. They wanted to enhance their overall operational efficiency via automations, be more agile and flexible in their overall approach. Herein, a global provider proposed an outcome-based model, right? Outcome-based commercial construct, wherein they proposed linking 20% of the overall fee to specific KPIs, right? Which will help the enterprise achieve their stated objectives. Now, these KPIs were around the count of automations which have been delivered on a year-on-year basis, reduction in the incident response time that they've been able to achieve, alongside few others, right? Now, the key takeaway that we saw from this particular case was the clear articulation of these metrics, right? The measurement criteria and even the targets help the provider differentiate themselves from the competition and obviously align themselves to the business objectives and priorities of the enterprise. Having spoken at length about the outcome-based model, you now like to get the audience perspective with respect to the increase in cloud support prices, right? The changes or decrease that they've done. Now, I would like to invite Bhanushi to conduct this poll.
Yeah, so another quick poll, right? So the question we want to ask is, how have you seen your cloud services? If you could launch the poll, Annabelle. Yeah. So in your opinion, how have cloud support services fees changed over the last 12 months? But what we want to focus here is not the input based or the T&M pricing, right? We want to focus on the output based over here. So do give us your perspective and let us know how much change you opine to have seen in the last 12 months. We'll give it another minute or so. And just, while we do that, another note to the audience, right? Do feel free to drop your questions. We have a Q&A going on as well, and we have some time saved for that towards the end. So we do want to hear from you what questions you have. You have all the experts here. You'll get all the answers today. So do drop in your questions in the Q&A tab. Okay, I think we can close this poll now and just look at the results. All right. So most are seeing a moderate increase, 0 to 5%, 55%. In fact, that's a great number. What do you feel, Ashutosh?
Thanks for sharing your opinion, everyone. Right now, let's look at the majority of the results. Now we've seen moderate increase as the thought process of this audience, right? Around 0 to 5% increase. Now, in contrast to the popular opinion, we've observed that the output based or RU based pricing within cloud services have actually decreased marginally in the tune of about 2 to 5%. Now, this may come as a surprise to few stakeholders here, but this is due to various reasons, right? And just to highlight that Bhanushi did mention the increase in FTE-based pricing in couple of slides ago. Now, when we analyze this trend in detail, we observe that the increased offshoring, more and more productivity, right? Enhanced productivity due to more maturity of the providers, standardized offerings, and also leverage of automation and AI solutions within the market has offset the FT price increase and actually made the output-based price go lower. And that's not at a very drastic level, but moderate decrease between 0 to 5%. So the 15% folks who have answered that, kudos to you guys. I mean, that's been our observation as well. Now, while we discuss the changes in output-based pricing for cloud support services, I would also like to highlight some of the challenges that comes with the implementation of output-based model. Now, as hyperscalers are expanding their portfolio with respect to infrastructure as a service and platform as a service, it is becoming more and more cumbersome for providers and enterprise to maintain a exhaustive list of pricing for each of these services, right? And to add to that, for some of the complex services, it is also proving difficult to maintain a single metric which will define or which will be a true reflection of the overall effort and the delivery construct which the providers have made in the background. And there are multiple moving parts to it, right? So to overcome these some of these challenges, right, and differentiate themselves within the market, we've observed providers have started to adopt a new next gen model, which is percentage of cloud spend managed, right? Now, as part of this model, service providers charge their support fee as a percentage of the overall spend that the enterprise makes with hyperscaler. Let's take a simple example to understand this, right? Now, for instance, there's an enterprise who's made a annual spend of almost 4 million with let's say AWS or Azure or GCP, right? Now, here the managed service provider would come and state that they'll be charging, say, 10% of that particular amount as the pricing for their support services, which would roughly come to around 400K for a year, right? So this is how the commercial construct of this model is. Now, as you may understand, this model is relatively simpler, and not only it accommodates the dynamic volumes associated to cloud services, but also helps relieve enterprises with some of the day-to-day responsibilities with respect to commercial responsibilities and overall billing, right? And helps them keep engaged at a strategic level. Now, in the example that I stated previously, there was a single percentage. However, in reality, instead of using one flat percentage, we see providers have segregated and come up with different T-shirt sizes depending on various factors, right? And they can be clubbed as infrastructure as a service and platform as a service together, and separate percentages for each of these T-shirt categories. Some of the low complexity services would include the likes of, you may guess, right? VM management, monitoring, log analytics, these type of services. Medium would be a little more complex with respect to services like AWS, Lambda, Azure Functions, some of the NoSQL databases like Cosmos or Dynamo. While the high complexity services would then be data and analytics services, right? Things like Redshift or streaming services like Kinesis and Azure Stream Analytics, stuff like that. Anaved, if you can move to the next slide. All right. Now we see the percentage of this cloud spend can range significantly, starting from as low as 4% to even as high as 32%. And there are multiple factors, as you may understand, impacting this range. For instance, the percentages would vary for an enterprise with a 10 million annual spend versus a 50 million annual spend, right? Similarly, the percentages would also increase or decrease depending on the precise services which are provided by SI. So, for instance, one engagement might have architectural support also included, while the other may not. And some of the delivery parameters like SLA stringency, the coverage window, which is 8x5, 24x7, or whatever, or even the onshore presence required, would impact this percentage significantly. Anavit, if you can move to the next slide. While we looked at some of the new age commercial models, it is also important to look at the trends around some of the key contracting levers that we've been observing within the market, right? Let's start with volume-based discounting. Now, APAC has always been a very competitive market. If I were to contrast it with geographies like North America or even Western Europe, right? We've seen that the average deal size for APAC is relatively lower. However, when it comes to the discounting, right, for such deals in APAC, it is pretty much in line with some of the large deals which we see in the North America and Western Europe market. Also, I'd like to highlight few things around the COLA clause. Now, COLA clause had become quite prominent, especially in the years 2018 to 2020, right? However, there were a lot of waivers and holidays, and providers were happy to give these waivers and holidays during that time frame. Now, given the current macroeconomic situation and the overall uncertainty that we're seeing within the market, these waivers and there's a pushback basically from providers on these waivers and holidays, and both providers and enterprises are looking to manage this in a shared manner. Now, one way that we're seeing how this is being managed is the risk being shared between both the parties. Now, Providers absorb the overall risk on a short-term basis. However, the gains or the risk, right, are passed on to the enterprise on a long-term basis. So in that way, the enterprises can control their overall costing in the uncertain economic situation. However, then the providers get the advantage to increase or decrease their price periodically, depending on the overall situation. Around payment terms, we've been observing a lot of APAC enterprises being quite demanding. Now, again, similar to what I said for Cola, owing to global economic uncertainty in the APAC market, top-down cost management mandates, and even some of the vendor consolidation or rationalization mandates, right? Enterprise do not prefer waiting for annual governance meetings to bring up the discussion around payment terms. These are now being even discussed in quarterly or biannual review meetings, even in some of the performance or transformation meetings, to ensure that the payment terms are in line with in line with their aggressive outlook. All right. Now that we have covered the trends around commercial models, some discussion around next gen models alongside the effect of contractual terms and conditions, it is also critical to understand the key trends around location and talent, right? And let me invite my colleague Mihir, who's an expert on this, to talk about this.
Hey, thanks a lot, Ashutosh. I know there was a lot to absorb, some really interesting insights in Ashutosh's section. And in the interest of time, I'll just also quickly take you through some of the key emerging trends that we're seeing from a locations perspective. Coming to the next slide, the obvious trend that we've been seeing is growing interest in tier 2 and tier 3 locations. Now, this has been particularly true for, as you can see in the table over here, the graph, China and Philippines, almost 45% of new openings in 2022 were in tier 2, tier 3 locations. It's important to highlight here that in China, it's usually China to China delivery. So if you just focus on Philippines, it's a significant number. In India, we're seeing roughly about 20% of new openings were in tier 2 cities, tier 3 cities. But in absolute numbers, India leads the way, is paving the way for this trend. Interestingly, in the past, people look at enterprises would look at tier 2, tier 3 locations as just for lower costs, just a cost factor. But interestingly, we're seeing a lot of center of excellences. We're seeing a lot of R&D centers and advanced R&D centers being set up in these sort of locations. If I had to give you some examples, from a service provider's perspective, we've seen Concentrix has opened up centers in Philippines, specifically Davao and Cebu City in 2022. You've also seen IBM open up in Cebu City in the past year. India has seen, again, a lot of activity. As I mentioned, Concentrix, again, they opened up a center in Bhubaneswar in 2023. IBM has had a lot of activity. Kochi, Gandhinagar, Kakanad are all locations they've opened up in 2022. And Accenture, again, they've opened up 2 big centers in Indore and Coimbatore. What's important to tie, I think, the poll that we had at the beginning, which highlighted some of the key concerns, rising costs, reducing margins. Interesting enough, in tier 2, tier 3 cities, the savings that they offer, if you look at India, it's about 10 to 25% over a tier 1 location. And in the Philippines, it's anywhere between 15 to 30%. So that cost arbitrage really shines through. If we go to the next slide, we've got this depiction of talent and cost arbitrage, and visually you can immediately see how that graph is dominated by Indian and Filipino cities. While this is expected to remain roughly the same over the next few years, we do anticipate costs to rise in these leading locations as talent wars, there are more companies coming in, reducing talent availability. But with new locations coming in these tier 2 cities, you'll start seeing them entering the fray. We already see Cebu City is creeped into the picture. In fact, when you look at BP services, Cebu City is right there with Bangalore and Mumbai. So this trend is just going to consolidate going forward. And over the next 3 to 4 years, you'll see more of these tier 2, tier 3 locations really coming through. Proceeding to the next slide. Yeah, thanks so much. As we draw closer to the end of this webinar, I think it's been quite clear that APAC is really where all the action is happening. And even when you look at talent demand and you compare leading APAC locations with other leading onshore, offshore and nearshore locations, Malaysia, India, and Philippines are far ahead of the pack, right? Talent demand has been growing exponentially higher than other leading locations. And it's not just for BPS, but even in ITS, we're seeing a similar trend. If you look at the sort of roles that are in great demand, if you look at some key IT roles, and these are trends that we're seeing across the region as a whole, among the top 2-3 roles are developers and test engineers are consistently seen as the highest in demand across all leading APAC locations. Similarly, when you look at BPS, the roles are primarily around accounting and finance services and customer service agents. India does have one unique, it stands apart from the rest of the region in the sense that UI UX engineers are consistently in great demand. And that's evident because you look at the talent that lies in cities such as Hyderabad, Pune, Bangalore, the IT talent that exists over there. It's not surprising to see India stand apart over there. And in Philippines and Malaysia, there is a growing demand for Salesforce administrators. So that's something which, just off the top of the head, these are some leading roles in terms of demand. Going on to the next slide, and before I wrap up my section, I think it's critical for all companies. We've been talking about trends and how things are changing, but it's really important to look at the risks that lie, in the region, and especially in Asia. It's a large, complex region. Every country is dealing with its own set of problems, its own set of challenges. But if you look at 2-3 common trends that we're seeing, geopolitical conflicts are one. Corruption and worker shortages are also of great concern. Geopolitical conflicts have really come to the fore in the last 1.5, 2 years now. We have seen how the Russia-Ukraine war and now the Israel-Palestine war have impacted businesses, how they have impacted business continuity. And if you look at Asia, there are a lot of hotbeds, there are a lot of risk around a potential conflict rising. If you look at China, you have China-Taiwan, its claim over Taiwan. India has its own geopolitical conflicts on the borders with both Pakistan on one side and China on the other. And then you have the South China Sea dispute, which actually implicates many of these countries, Malaysia, Philippines, there's Indonesia, Japan. All of these countries are impacted by it, of course, China as well. So it's critical for companies, while you're looking at from a business perspective, is developing strong, robust, risk mitigation plans to deal with a potential. Okay, my video seems to have cut off there, sorry. It has become critical for companies to really stress test their risk mitigation plans, build strong contingency plans which incorporate what if scenario testing, and then really deciding their location strategy. In terms of worker shortages, one of the key drivers for this is we're seeing a shrinking population trend in Asia. China, Singapore, Thailand have actually reported marginal decrease in population in the last 1 or 2 years. And Malaysia just reported a stagnation in population. Now, while this won't have an immediate impact, if you're looking at entering these locations in the next 15 to 20 years, 10, 15, 20 years, that scalability of talent could potentially get impacted. I know we touched upon GenAI before, and it could help solve these challenges. But yeah, these are just some of the risks that we thought were critical for companies to keep in mind when exploring APAC as a region. With that, I've come to an end with my slides, my section, and I'd like to invite Bhanushi to just summarize
Yeah,
the
thanks,
learning,
Mihir.
the key points from today.
Yeah, great insights, Mihir. Thanks for sharing. And we just want to quickly, give you the offer for today, right? So today's offer is for buyers and for enterprises. So we want to give you one complimentary access to one ready-to-use category strategy. You're all sourcing professionals, so you know how tedious it is of a task to create category strategies. So what we want to do by giving you this ready-to-use document, and we will be giving it to you in PowerPoint format, right? So you can just edit it and use it in your executive presentations, and you don't have to waste your team's strategic time to actually draft what components should be there as a part of it. So we have market trends, we have TCOs, we have pricing benchmarks, we have performance benchmarks. All of it is already present in these. You just need to choose which template you want. Link is in the chat, and feel free to fill that and choose the template that you want. We'll be sharing it with you after this webinar. All right. So with that, I think what we will do is we'll just wrap up this webinar, and we will quickly jump to Q&A. We do want to take some time to answer your questions. So if we move to the next slide, the last slide of this, Annabeth, the next slide. Yeah. So we just wanted to summarize the forward-looking strategies for 2024, and they span across, pricing, technology usage, commercial model usage to drive value, as well as, of course, assessing your overall sourcing portfolio risks to actually see the impact on outsourced service delivery, right? So you want to see the entire holistic picture from all the findings that we've shared to you, and then analyze your sourcing portfolio accordingly. All right. So with that, I think we wrap up this particular, webinar, and we hope that you really enjoyed it. Now we'll take some time to, get to answer your questions. So we do have some interesting questions that have come from before as well. We will be addressing a couple of those as well as the ones that have come into the live chat. Ashish, do you want to help us, sort of navigate the questions that we have over here?
Yeah, sure. We have quite a few. We'll see how much we can take. But Mihir, probably this is a question for you. What are the emerging tier 2 and tier 3 locations for IT and BP services in leading countries such as India, Philippines, and Malaysia?
Sure, Ashish. So this is really a very active space, especially India. There are a number of different locations, but top of the head, if I had to just look at IT, top 3 or 4 locations in India would be places like Ahmedabad, Chandigarh, Kochi, Jaipur. Coimbatore is also an emerging location. In fact, it's a big startup city. So you're seeing a lot of activity over there from a tech perspective. In Philippines, Cebu City, Clark, Cavite City, and Iloilo come to mind. When we look at Malaysia, and this is both for IT and BPS, Malaysia, you have Georgetown and Johor Bahru, which are where the activity lies. Specifically for BPS in India, Chandigarh, Jaipur, and Kochi are seeing a lot of activity, and we anticipate that demand to continue over there. The talent is also very good quality in these regions. And Philippines, apart from Cebu City, Cavite, and Davao, you have Bacolod, which is a tier 2-3 city, which is really, we have been seeing a lot of talent demand in that in the last couple of years, and we expect that to continue. I hope that answers the question.
Yep. Thanks, Mihir. Another one we have is, are there any relevant key terms and conditions that procurement and sourcing organizations will need to prioritize with regards to AI technologies and negotiations of those respective contracts? Anyone wants
This
to
is a
take it?
very interesting question, very specific to AI and the sourcing that is happening around it.
Yeah.
So specifically with respect to AI and the steps that procurement needs to take, firstly, the InfoSec clauses get revised, right? The privacy clauses get revised. Your indemnification clauses get revised. because you're working with a lot of new companies, startups in the ecosystem. So of course, you cannot give them millions of dollars in indemnification, right? You have to revise those accordingly. But you also have to look into your own, the privacy clauses and the infosec clauses. You want to make them a little bit stronger. And procurement is actually the train that drives this entire process, right? So of course, we don't have the technical details of what goes into infosec or what goes into data privacy, but we do want to make sure that we get deeper into each supplier's ecosystem and understand how we can best protect ourselves. And of course, on the cost side, GenAI and AI technologies have a very large infrastructure cost. So you want to make sure that you understand what that would be, especially for the pilots or small use cases that you have in place.
Yeah. Thanks, Manushree. Another one. Do you see a trend of companies looking to insource work to their captive centers from existing third-party service providers?
Yes, so I would say that we are seeing a lot of in fact, I spoke about the key issue study, right? So we have of course surveyed a lot of enterprises, GCCs, service providers, and we've seen how work is shifting. And in especially 2024, we are seeing that the sort of weight is shifted more towards GBSs or captives, right? So service providers is there. I think the number is in the range of 35 to 40%, whereas around 50% of enterprises actually selected moving it more to captives. So the bias is towards captives now.
Got it.
Here is basically the size of the GBSs, right? We've seen more insourcing to go towards larger GBS organizations, wherein the smaller ones are still preferring outsourcing because, of course, obvious reasons, economies of scale, and then to be able to optimize the overall operations and cost.
Awesome. I think we're almost on top of the hour. I guess if we do have some more questions coming in, we could answer them separately later. But Annabeth, do you want to wrap up?
Yes, thank you to Ashish, Banushi, Ashutosh, and Bahir. And thank you everyone for attending today's webinar. Again, you will receive a follow-up email within 1 to 2 business days with a link to download the presentation slides, along with accessing the on-demand playback of today's live session. On behalf of Everest Group and our presenters, thank you for joining us today and have a great rest of your day.